All right, so today we have a bit of a different video for you. I'm going to just do a quick financial analysis on the 192 Windsor duplex conversion project. So this is a project that a client of ours purchased earlier this year, and they've successfully completed the duplex conversion. They've made a legal basement apartment. We've already done a walkthrough video that will show you some clips as we go through this video. But today's video is more about the financial analysis of how the numbers worked out on this project. So let's dig in a little bit deeper into it. So I'm going to share my screen here in just a second. So, all right. So this is the property 192 Windsor. He was able to purchase this for $432,000. Now, for some context, right now that we've sold an identical home to this to another client for around $530,000. So basically the market value of this home since he purchased has pretty much gone up close to $100,000. His down payment on this purchase was $86,400. Typical land transfer tax on that purchase price, $5,115. Legal fees is about $2,500, usually less, but we buffer around that. And this particular project, he spent around $90,000 in total renovations to really make a legal basement apartment. And he was able to get some stuff done upstairs, namely the quartz countertops, updating the kitchen cabinets by painting them and cleaning them up. So all in all, his total investment to do this project was $184,000. That's his down payment, closing costs, and renovation all put together. This is what you need to able to do a project like this at this purchase price. Now we're actually looking at a little bit of higher numbers because we're purchasing it at those higher prices. So here's where it gets interesting. This particular project was appraised for $650,000. Now, it's not normal that we know right when we purchase the property that we're going to get an appraisal $200,000 over our purchase price. Already, right now, we're buying properties in the $530,000 to $550,000 range for semis, and we know that the refi is only going to be, as of today's numbers, $650,000 to $700,000. When he bought this, we were expecting the refi to come back at around $530,000, right? But what happens in a very active market like in Ontario, most of the smaller markets are really on fire, and what happens is in the 6 months between the project starts to finishes, many times if the market lifts along with you, you're able to then get a refinance value that's well above what you expect when you purchase the property. So that's what happened in this case. He got 80% of that appraised value as his new mortgage for around $520,000. Typical standard variable interest rate is about 2% right now for rental properties. He now has about $130,000 of equity in the property even after refinancing it, but he's just left in the deal only about $9,600. Amazing numbers. This is basically a full buy, renovate, refinance, rent deal, right? He's able to pull out all of that initial investment except for $9,000, and he's still left with about $130,000 in equity in this deal. Total rent on this property, $1,850. He was able to rent the upstairs and basement. We're expecting about $1,500 plus hydro. So his all-in rent should be around $3,345. And then if we scroll down here, his new mortgage at the new refinanced amount is going to be $1,920. Property taxes are about the same, $221. His insurance is $139. Water and gas, so he's only paying for water and gas since hydro is paid by the tenants, is about $200. And in this particular case, he has chosen to go with property management at about 8% plus HST, so about $300. His monthly cash flow after those expenses is still about $563. So very good numbers. It's becoming harder and harder to do this, where when you refinance all your equity out, you're still left with cash flow, especially after property management. Right now, the properties we're purchasing today, that margin has been shrunk slightly. But this is the most interesting part about this deal. When we look at a real estate investment deal, it's important to find properties with cash flow, but it is also important to have an idea of what the bigger picture looks like on an investment like this. So keep in mind, he's left in this property only $9,000, but I'm going to assume his return on investment based on the $130,000 of equity he has in this deal, because that's equity he's created. Even though he didn't put that into the property, it's still money that if he were to sell the property today, he'd be able to extract it. So it is still value that he owns today. And we're going to extrapolate what does this look like over the next 1 year, 3 years, 5 years, and 10 years. So we're assuming in Ontario that the market is going to appreciate at about 5% a year. There's no guarantee it's going to do that. It may be less, but the last few years have shown it's been considerably more. Given the population growth statistics in Ontario, we'd probably have to increase our current building by 50% to just meet the current amount of immigration that's happening. And there's literally no way to do that based on the cities allowing permission to add more units. But even if all the cities in Ontario colluded and really allowed us to build that many additional housing units, there's literally not enough contractors to physically build the amount of housing units that are needed. So again, I'm not saying that there won't be any kind of real estate correction ever, because if the government just steps in and raises interest rates, that will directly have an impact on housing prices. But I think in the long term, given the supply demand dynamics, we will definitely be seeing appreciation over the long term. So I'm budgeting 5% a year. You can use your own number, but I think 5% is a very safe number that we can use. So here's how the numbers work out. In the first year, the cash flow is about $6,700. Over 3 years, $20,000, over 5 years, $30,000, and over 10 years, around $67,000. So just the yearly cash flow multiplied by the number of years. Again, this is not always going to be the case. Sometimes you're going to have plumbing repairs, you're going to have maintenance, just miscellaneous expenses that come. And I would almost say you almost want to put some of that money back into the property, do the roof, do the furnace, keep the standard of the quality high so that your tenants are happy, and that the value of your property is kept up so that in the future when you refinance or sell, you get top dollar for your property. The real profit, I think, is going to be the mortgage paid out, which is still a significant amount here, right? Over $12,000 per year, within 5 years, $66,000, over 10 years, $140,000. And the appreciation, the variable number, but even at that 5% that we're forecasting, it's almost $32,000 every single year. Many people don't even make that in a single year. So if you imagine having to save even just the equity and the mortgage paid on portion, we're looking at around $45,000. Imagine if you had to save $45,000 every single year. How hard would that be? Like it's an incredibly difficult number for most people to do after taxes, especially. But by owning a single rental property, you're able to create that amount of wealth every single year. And you know, when you extrapolate it out, even at the 5-year mark, you have around $200,000 of potential equity. Keep in mind, he only has around $10,000 left in this deal. But even if we look at it as a percentage return on the $130,000 of equity, his rate of return over that 5-year period is 169% in total, which breaks down to a compound interest rate of around 21% a year. There's very few investments that are as reliably safe, I would say, as real estate that can really achieve that amount of return, especially over longer periods of time. And it's interesting, you can see in the first 1 to 3 years, that number is even higher because the way compound interest works, as you have more equity, it needs to grow at an exponential rate to keep that the compound rate of return the same. So you'll see that it diminishes over time. But what we find most investors do is, as soon as they have about another 100, 150,000 of equity in a rental property beyond the 20% that they need, they typically go back to the property, refinance that out, buy a second property. So that keeps their rate of return sometimes as high as 25 to 40%. But again, this is conservative numbers. You want to just, even if you buy a property and hold it for 10 years, your rate of return goes to 16%, which by most means is still a very good interest rate. And just look at the total return on one property, $479,000. In most people's lives, that is a life-changing amount of number on one rental property. Imagine if he bought 2, maybe 3 properties and then stopped, right? Over a course of 10, 15 years, those amount of numbers can dramatically make a difference in your financial future and building financial wealth. Anyways, the purpose of this video is just to give you a high-level overview of all the numbers when it comes to this specific investment property, and we'll show more clips of the properties before and afters, and you can check out the video we did of the walkthrough as well if you want to see more and listen to this investor who purchased this property. But again, I want to stress, cash flow is something we always look for insurance. That's what stops us from having to feed the property, pay money into the property. But the reality is in Ontario, the real return you're going to make from these investment properties is the equity that you build through the mortgage paydown and the appreciation. These are the life-changing numbers that, you know, after 5-10 years, you sell it, you take that, you can almost live off of it in some cases. Or maybe you have 2 or 4 rental properties and you sell half of them off and you pay off the mortgages on the other half. Then you're left with, you know, 1 or 2 properties that are paid for. Then you really start to see some cash flow coming in on a monthly basis. Hope you found this helpful. If you're interested in creating a legal basement apartment, definitely check out our free guide in the link below. And yeah, if you have any questions, always feel free to comment. Until next time, all the best.